Hey everyone, it's Jeremy McDonald. So what in the rate is going on? As we all know, last week was the initial of the expected 7 federal funding overnight rate hikes. So last Wednesday, the Fed raised their federal funding rate by 1/4%. And then this Monday, Jerome Powell comes out and states that they expect to raise it 0.5% in May's meeting, and is holding true to the seven rate hikes this year. In addition to that, they're talking about balancing their sheets. So what's happened is once COVID hit and the CARES Act was passed, the Fed has basically had a blank check policy towards the mortgage-backed securities market. So buying billions, and I mean billions, over $50 billion per month worth of mortgage-backed securities during the height of the pandemic. And as they've started to taper back in November, that's when we started to see interest rates, creep up. And then with the comments that were made in January and February, we saw rates go up more. And then now the Fed increased their federal funding rate. So that actually is an overnight rate that banks use to essentially borrow money from each other overnight. So it's not exactly a mortgage rate, but it does play into it. It is one of the factors. The bigger factor is the mortgage-backed securities and how those are traded. So that's really what we're seeing now having an impact, is because of the Fed stating that they want to balance their sheets and stop being owners of mortgage-backed securities. So because of that, and because of the conversations that are going to come and the inflation that we do have, we're going to continue to see rates go up this year. So rates are going to go up. We all know that. But how does that affect people that are looking to purchase a home? How does that affect people that are looking to sell their home and then purchase another one? So I can't say for sure what's going to happen. This is just my opinion on this. Having started in the mortgage industry back in 2003 and having seen the craziness that happened in the 2000s with the subprime mortgage industry, to where that it was like, hey, everybody gets a loan. This is very different. So, but how is that going to affect people? So we all know that looking to get a mortgage, you're going to have a higher interest rate. That's a fact. A healthy rate environment is rates in the 6 to 7% range. We've really been spoiled the past decade with having good, healthy market rates. And over the past 2 years, we've had the lowest rates in the history of mankind. And a lot of people, just expected that to stay like that, and it never could. So what this means is that people that are coming into the home buying market for the first time are going to have to pay more money for the same house or get less house for the same amount of money. Pretty simple, right? It still beats renting. I mean, rents have gone up 20, 30, 40% over the past 12 months. And there's really no relief in sight. So what's the big deal if your payment goes up 3 to 5% on the same house? Because when we're talking about the differences in the rates over 30 years, that's really what it is. So it's not a huge difference. Now, in my opinion, what I think we are going to see happen is I think we're going to see people that have been first-time buyers, in the past 3 to probably 7 years, that have been thinking about selling their home and purchasing the next home, the step-up buyers. I think that we're going to see a lot less of them, and I believe we're already seeing a lot less of them selling their homes, looking to purchase a new home after that. So that's really going to put a clamp, if you will, or a bottleneck on those first-time buyer homes that these people would be looking to sell to get out of their first home and into a step-up home. Because I think a lot of them are going to look at it and say, hey, I've refinanced or purchased in the past couple of years. I have the lowest rate that I will ever have in my entire lifetime. So if I sell this, yes, I'm going to make a great amount of money selling it, but the interest rate that I'm going to have on my next house is so much higher that I'm going to have to go so much above what I'm paying now to really even get a nicer house. And my guess is a lot of people that would have sold to buy up are now going to do home improvements and things of that nature, or just say, hey, we're going to stay in this house for a few more years until we start making more money and we feel more comfortable. So I really believe in that under $300,000 price point, we're definitely going to see it to become even more competitive competitive with less supply, but still heavy demand, because again, it's still cheaper and more affordable to buy than it is to rent. So that's kind of my theory, my thoughts on what's going to happen with that. You know, in the more expensive price points, you know, your $500,000 and up homes, you know, I do think there's going to be a little bit less competition for those, especially with the new builders that are building in that price range. So maybe that will give some relief to where that you're not having to get into a bidding war for a $600,000 house. You know, maybe you'll actually be able to get that $600,000 house for $600,000. So that's kind of what I see and what my opinion is. You know, there was a spike in birth rates from 1987 to 1993, and the average age of a first-time home buyer has been 33 years old. So we still do have more first-time buyers coming into the market. And because there's been such a supply issue the past couple of years, there's a lot of people that wanted to buy that have decided to sit on the sidelines. And now that they're seeing that rates are going up, they're getting in the game now. So me and my team, we're busy every single day taking applications, doing pre-approvals, having conversations with people, trying to save loans from builders, lenders that have dropped the ball. We're always happy to do that. So I don't really foresee that there's going to be, you know, this all of a sudden small amount of people trying to buy. You know, it's not going to be a situation to where that you're going to, especially in the first-time buyer market, be able to go in at asking price or below asking price or ask for seller concessions or any of those things. So just encourage you to, you know, not get discouraged. Understand that rates are still historically low speaking. They are lower than a healthy rate market. However, it is the Fed who wants us, and the federal government who wants us to get to that healthy rate market. So everyone in this industry kind of thought that by the end of this year we would be seeing rates in the fives. Well, we're already there. That's only March. So I think a lot of people are kind of scared to say it, but don't be surprised if we're in the sixes by the end of the year. So that does make a difference on your payments. So again, you do want to act now. There's really no benefit in waiting unless you got a promotion coming up or something along those lines, but you will pay more. If there's anything I can do for you, if you have any questions, I'd love to help you, love to talk to you. So I hope you have an amazing day. Thank you for watching my video.